Hey there, Dave Keller here with Market Misbehavior. Today we're going to talk about my market trend model. Looks like this week turning bullish on all three time frames. So years ago, I used to look at the same weekly chart of the S&P 500 every week, and I would look at it and I would have the basic same assessment as I reviewed the same chart. I would say, what's the trend on the short term, medium term, and long term? Now, for me, multiple time frames are very important because it helps you understand context, right? You have to remember that whatever time frame you're operating on, for me, it's usually about 1, 2, 3 months or so. I also have to remember there's a shorter term time frame, that swing trading time frame that's a couple days to a couple weeks. There's also that long term time frame, a couple years down the road. And by recognizing that my time frame is also part of a much longer time frame, it is also comprised of smaller flickering ticks of the shorter term time frame, helps me put moves on any given trading day into proper context. So we're going to talk about today is my market trend model, how I created it, why it's an important part of my process, how it thinks about these and relates these different time frames, short term, medium term, long term. We'll look at the current readings and what it's telling us here in mid-November of 2023, and then I'll give you a quick peek at some of the applying the market trend model to some other asset classes like bonds and cryptocurrencies. And before we get to that, it would help me a great deal if you would like this video, subscribe to my channel while you're here. We would so appreciate it. Also, put a comment below. What is your take on the S&P 500 into the beginning of 2024? What sort of objective do you have to the upside or the downside? Drop a comment below and let me know. Love to hear where you guys are at with these markets. Now, before we get to the chart of my market trend model, here's one more thing to tell you about. Today's video is brought to you by Seeking Alpha. I'm a big fan of places that allow you to better understand the market environment. I think seekingalpha.com is certainly one of those. When you go to the website, I would check out the stock screener, particularly because it allows you to use Seeking Alpha's proprietary quant model. In my experience working with institutional investors, we always had what's called an alpha model or a quantitative model, which really modeled the characteristics of strong companies, demonstrating strong growth prospects and strong price momentum. Seeking Alpha does a really good job of taking that institutional level quantitative capability and putting it in the hands of individual investors. If you go to marketmisbehavior.com/seeking alpha or just click on the link in the description below, you can go right to a special offer. If you use the link, you get $50 off your first year and also get a 7-day free trial to check everything out. So go to marketmisbehavior.com/seeking alpha. Now back to the video. So here's my market trend model. This is using a weekly chart of the S&P 500, and then we have histograms at the bottom for the long-term, medium-term, and short-term timeframes. Now, again, what I was doing years ago was looking at a weekly chart of the S&P 500 every week. Part of my routine was to look at the chart and just think about different time frames, right? What was the long-term time frame, a year or two down the road? What was the medium-term time frame, sort of a couple months? What was the short-term time frame, a couple days to a couple weeks? And I have to point out, this is not a predictive market trend model, right? There's no guarantee that the trend will persist by any definition. This is more reporting on the current state of the market on these different time frames. But what I have found, especially on that medium-term time frame, is that trend matters. This is why trend following or momentum investing is such a popular approach and honestly very successful if you look over the long period of time through multiple cycles. And that's because on that sort of medium-term time frame, sort of 3 to 6 months, buying strength tends to work and underweighting weakness tends to work too, because this is where trends tend to persist, particularly in the equity markets. So the way that I constructed this model is basically, talked to a number of mentors, peers in the industry, read whatever books I could find, kind of settled in on this combination of exponential moving averages that did a pretty good job of basically approximating the way that I would subjectively report it. So I would basically go through and write down on a paper every week, all right, long-term trend is okay, medium-term trend is weak, short-term trend is strong, and I would do that assessment every week. That was part of my process. I found by designing this chart with these moving averages, pretty much with a glance could tell what the trend had been. And it also allowed me to quickly apply this market trend model to other asset classes as well, which I'll show you at the end of this video today. So let me go through quickly what this chart represents and how it's calculated. So we have a 5-year weekly chart of the S&P 500 and 4 moving averages, and these are all weekly exponential moving averages. The 5-day is sort of this thin, or the 5-week is sort of this thin blue one. The thicker green one is the 13-week. The red line is the 21-week, and the purple line is the 34-week. You can see that in the legend in the upper left. Now, the long-term trend model for me simply looks at the difference between the 21 and 34-week EMA. So if the red line's above the purple, the histogram is positive, the trend is bullish. If the red is below the purple and the histogram is below zero, that means then we're in a bearish trend. That's it. It's binary. So I don't have a neutral reading. I don't have a it's okay kind of sideways reading. It's literally just a binary call, bullish or bearish. And that's just for simplicity. I find I have a lot of nuance and a lot of subjectivity in my analysis in other places. So keeping this a little more rigid was just better for me. The medium-term time frame, which for me is sort of the sweet spot. This is where I'm really trying to focus my attention as a strategist and as an investor. It's looking at the difference between the 5-week and 13-week EMA. So it's the thin blue line versus the thicker green line. And if the 5-week is above the 13-week, the histogram is bullish or is positive and the trend is bullish. If the 5-week is below the 13-week, like you see here in mid-2022, the histogram down here is below zero and the medium-term trend is negative. At the bottom, it is very simply looking at the current price versus the 5-week EMA. So the price is above the thin blue line, it's bullish. If it's below the thin blue line, it's bearish. Now, to be honest with you, that short-term time frame is really just a placeholder. If I really want to understand that swing trading type of time frame, I would go to my daily chart of the S&P. That's where I like to focus my attention. But this is more just a placeholder. I found the other two trends were good to automate, and this was just a nice little visual indication of what the short-term fluctuations have been. Because a lot of times, what you have to remember is that medium-term time frames occur because of a change in the short-term time frame. The long-term time frames finally reverse trend once the medium-term time frame has been able to persist for a certain amount of time. So thinking about those are pretty helpful. So again, one of the big takeaways I hope from this video is that this is the time frame I'm operating on. So I'm looking at one larger time frame and one shorter time frame. I want to understand the little peaks and valleys that make up my time frame of interest, and I also understand how the time frame I'm operating on, how that investment horizon fits into a much longer term appreciation of the trend, and recognizing whether we're in more of a cyclical bull or bear market phase. So let's look at what the market trend model has done over the last 5 years, and we'll start with the long-term trend because that really tells you the main story here. So you can see it went negative in late 2018. That was on that sell-off there, and of course it came down before then. We rallied there, and it turned positive in February. So you'll note in February of 2019, in June of 2020, it's not designed to identify the bottom as it's happening, particularly the long-term trend. It takes quite a long time for the price or for the trend to reverse, and my goal is to benefit from the bulk of these trends, right? And that's why the long-term trend model takes quite a long time to reverse higher, and when it finally does turn higher, it tells you something major has already happened, right? It's sort of like a rear view mirror. That was a significant bottom. If you're not engaged at this point, you probably should be. It went negative there in May of 2022, confirming the bear market phase there. Turned back positive. It actually came at the end of March before that breakout there, and has remained bullish through that period. I don't have a problem thinking of the S&P chart, understanding that trend from mid-2020 through late 2021, the rotation lower, and validating it finally on that breakdown as a downtrend coming out of the October low, finally turning positive here. That's pretty much how this trend line or this market trend on the long term is designed to operate. It just reminds me to generally think about that bigger picture evolution. Now, for me, the medium-term time frame is the most important one because that is my main risk-on, risk-off measure, or what some might call, Gaddis Rose, a longtime StockCharts contributor, sort of considers this a permission to buy, or a different methodology, but he likes to call it the permission to buy, right? When the trend is positive, that's your permission to go take opportunistic bets, and that's how I tend to think of it. It's not like I wouldn't buy a good chart if the medium-term model is negative, and I would not sell something that's breaking down if the medium-term trend model is bullish, right? It's not telling me what to do, but it's more telling me the environment, right? Because in a bullish phase of the market, you tend to have more breakouts. You tend to have additional buyers coming in. So it just tells me to be focused on breakout opportunities, to follow strength and benefit from the fact that this larger trend is probably going to keep going. When the trend model turns negative, so you can see the medium-term trend model for me was a really good indication here in January of 2022, basically suggesting that this bullish phase it confirmed in May of 2020 was now finally over. It told me to stop being aggressive on the long side. I don't really short stocks a whole lot, but it told me to be more defensive, right? To think about capital preservation as opposed to capital growth, to focus more on stops as opposed to breakouts, to be skeptical of stocks breaking higher because that's probably an outlier, to recognize more that generally speaking, stocks are probably going to be struggling in that sort of environment. So generally speaking, being on the right side of the trend in the form of this medium-term trend model has served me particularly well, and it's helped me to remain bearish at a time when the market conditions are weak. It's helped me to turn bullish when the market conditions turn positive, and when it chops around a little bit, it tells me to be patient, right? And as Jesse Livermore would say, time to go fishing. Finally, the short-term model, again, just a placeholder. It's just to quickly show me the short-term trend. In the last week, is the trend positive or negative? Is basically what that's essentially telling me. So if you look at what has happened through the course of 2023, my medium-term trend model really has been mostly bullish since November of last year for about a 2-week period in December and a 2-week period in March. It turned slightly negative, just barely below the zero line, but overall, most of that time has been in buy mode, which has basically suggested to me be comfortable taking long opportunities. Now, it did turn negative in mid-September, which was one of the many indications that told me, all right, there may be a much bigger drawdown than we've experienced so far. Just this week, and again, assuming Friday is not a disastrous down day, my medium-term trend model most likely turns bullish. And note to everyone, I actually update this every Friday at the close. So I don't update the model during the week. So if something crazy happens, I wait until the Friday close is locked in to make any changes to the model. So it's still technically bearish until Friday's close is locked in. And that's something I learned from a mentor of mine, Jeff Weiss. He would look at weekly and even monthly charts, quarterly charts even, of major indexes. And when I would see a big move, I'd go and ask him about it. He's like, nothing. Until the weekly close or until the monthly close is confirmed, nothing's happening. This is just noise. And I've never forgotten that great advice from Jeff Weiss. Now, the short-term model, of course, turned bullish about 3 weeks ago. And that's, again, just picking up on this quick reversal off of the lows. So what has happened here is the long-term model has been bullish since March. My short-term model just turned bullish a couple weeks ago, basically off of that big rally off of the swing low in October. And now the medium-term trend model, given the strength in the short-term, just finally turning bullish. So what does that mean? I think there are a lot of reasons why the market could stop going higher. I could give you all sorts of macro themes that would prevent the markets from going up or should be a major headwind to the markets going higher. But as Ralph Acampora taught me, I think, beautifully a long time ago, it's like, when in doubt, follow the trend of the market, right? Follow the S&P. The trend is positive. My market trend model is bullish on all 3 timeframes. Basically tells me to not be afraid to follow trends going higher and assume that those trends will persist until proven otherwise. So the trend in the S&P appears to be bullish here, according to my market trend model as of Friday. Let's look at some other market classes or market indicators very quickly. And what's great about this market trend model, this combination of moving averages, anything with closing price data on a weekly basis, you can run this model on, and I've essentially run it on different asset classes with pretty decent amount of success. Now, you'll note with the QQQ, it's actually been bullish on all 3 timeframes since last Friday. Last Friday, the medium-term trend model actually just turned positive. Short-term, long-term, all bullish. So the QQQ already bullish. That might be important as a leading indicator showing the growth, mega cap growth trade still dominating the markets here in November of 2023. Bond prices, right? A nice rally off of the lows. Rates have come down, but according to my trend model, it's just the short-term model, the short-term trend that is bullish. The medium-term trend still negative. The long-term trend still bearish. And so again, for me, it tells me to be patient and wait for some sort of confirmation from the medium-term trend model before I would say that rates really are going to accelerate to the downside. More likely at this point, I'm thinking of it as a counter-trend move until proven otherwise. Finally, Bitcoin. Worth noting here, Bitcoin has actually been bullish on all 3 timeframes for about 5 weeks. 5 weeks ago, that Friday, I got the buy signal from the medium-term trend model that lines up with the short-term and long-term, basically indicating that strength out of this basing pattern was to be believed. And from there, of course, the last 3 or 4 weeks have continued to be pushing to the upside. So again, this is not the end of the discussion. For me, this market trend model doesn't provide all the answers. It basically helps me think about what questions I should be asking. Should I be identifying more long opportunities? Should I be focusing more on updating stops and thinking about money management techniques to minimize downside? And while it's not perfect, as any technical indicator rarely is, it has helped me to say generally focus on the right side of the market. And here in mid-November of 2023, my market trend model says bullish for the S&P 500 and the NASDAQ 100. What's your take on the S&P and the NASDAQ between now and year end? Don't forget to drop a comment below. Let me know what you see for stocks over the next 6 weeks and beyond. For Market Misbehavior, I'm Dave Keller. Be well, stay safe. We'll talk to you again soon.